LiteFinance, the world of financial freedom.
Hello, it's Monday, July 3rd, and it is time to start the market forecast. This week might be slightly less active in the beginning due to holidays in the US, but it can turn out that we will get bigger volatility due to this low liquidity. So as usual, let's begin with the calendar. Today we got and still get final PMI readings from the manufacturing sector in Europe, where we can see Germany got revised even lower than preliminary numbers. Later we will get data from the US, but we also got Tankan Index data from Japan that looks much better than the forecast. As for the market itself, today Canada and the US have holidays, with the difference that the US will have an early close, so the banks will close sooner. On a Tuesday, we will get the RBA interest rate decision. On Wednesday, we will get PMI numbers from the services sector from Japan, Germany, Eurozone, UK, and in the evening, we will get FOMC meeting minutes. On Thursday, ADP employment and crude oil inventories, and on Friday, as there is the first Friday of the month, we will get NFP reading. As for fundamentals, we will take a closer look at the euro and prepare a trading plan for Euro USD. So as the central bank's monetary policies depend on the incoming data, the Euro USD is jumping up and down following the reports on the US and Euro area inflation. Both fell short of a Bloomberg experts' forecast. As a result, the main currency pair first collapsed to the first of the two targets set in the previous analytics and then soared above 109. It's the only beginning. The euro drop in response to the slowdown in consumer price in euro area from 6.1 to 5.5% in May looked natural. Both CPI and core inflation fell short of estimates. However, the latter indicator is still at an elevated level of 5.4%, which eliminates doubts about the increase in the ECB deposit rate in July. The question of the September pause remains open. In the US, the slowdown in consumer spending to 0.1% and PCE to 3.8%, the slowest level in 2 years, has discouraged the Euro USD bears. Moreover, the Fed's preferred price indicator for core services, excluding energy prices and housing costs, showed the smallest increase since July 2022. The Treasury yields declined, but chances of a federal funds rate hike to 5.75% or more slightly declined from 36% to 35%. This suggests that the euro rally at the end of the day resulted from exiting shorts. The actual data are so far from the forecasts, and the rebalancing of positions at the end of the month and quarter pressed down the US dollar. On momentum, the euro may grow even higher, but the economic calendar of the first week of July gives more bullish drivers to the greenback. Investors are expecting hawkish signals from the publication of the FOMC June meetings minutes. If the regulator decides to pause but is forecasting 2 more federal funds rate hikes in 2023, it needs clear directions for the next meeting. They will certainly find a place in the meeting's minutes. US non-farm payrolls have exceeded Bloomberg experts' forecast over the past 14 months. As a result, the indicator rose by 1.6 million in January to May, which indicates the strength of the labor market and challenges the Fed. If companies are actively hiring even as corporate spending rises, our recession is still a long way off. In June, employment is expected to increase by 200,000, unemployment will fall from 3.7 to 3.6, and average wages should rise by 0.3% month-on-month. And the figures are close to previous forecasts, and if the actual data exceeds them this time, the Euro-USD downtrend will gain momentum. Ahead of the publication of the FOMC June meeting minutes, the Euro-USD could be consolidating in the range of 1.086 to 1.097. If the price breaks out the resistance levels of 1.092 and 1.093.5, it will continue growing. In the meantime, I suggest selling the Euro USD on the price rise. And that will be all from my side for today. Thank you for watching and goodbye.